Hello and welcome to the Business Standard Morning Show. I'm Devarike Sanyal. It's the 18th of July 2023 and here are the questions we'll be answering today. How can UPI replicate its success abroad? How will Chandrayaan-3 mission help space startups? Why are mutual funds finding the going tough for small cap schemes? And how is TDS different from TCS? UPI will soon go live in France. And if talks succeed, Indonesia too will join the growing list of countries which have onboarded India's payment system. So, does this latest linkage with France suggest that UPI's international journey has taken flight? And how indeed can UPI replicate its success overseas? I decided to check in with the experts to bring you the answers. The United States is keenly awaiting the launch of its FedNow payment system, which is expected to go live in a few days from now. Developed by the US Fed, it is being touted as America's answer to the host of issues and pain points that plague the global payment infrastructure. But did you know that in November 2019, Google had written to the US Fed asking it to design the instant payment systems FedNow on the lines of India's UPI? Developed by the National Payments Corporation of India or NPCI, Unified Payments Interface or UPI is an instant payment system. Launched in 2016, it has become a way of life for people of this country. There were 300 million monthly active users as of November 2022, a number close to the US's population, and it's going global now. The central government went one step further to expand the UPI's reach last week, with Prime Minister Narendra Modi announcing during a visit to France that the payment medium will soon be made available in that country. UPI's proposed entry into France comes just months after India and Singapore inked a pact in February to launch cross-border connectivity between the UPI and its Singapore counterpart, PayNow. India has different kinds of agreements across several nations when it comes to UPI usage. On 10th of January, the NPCI announced that non-resident individuals with bank accounts in India will be able to use UPI using their local phone numbers from 10 countries. They are Singapore, Australia, Canada, Hong Kong, Oman, Qatar, USA, Saudi Arabia, UAE, and the United Kingdom. Two common transactions conducted via UPI are peer-to-peer and peer-to-merchant. Currently, peer-to-merchant payments are accepted internationally in UAE, Bhutan, and Singapore. In case of peer-to-peer payments, foreign inward remittances, that is Indians receiving money, and foreign outward remittances, that is Indians sending money abroad, are allowed only to Singapore. However, with payment options like tap and pay associated with credit cards in countries like France and Singapore, is UPI really without competition?
Talk about tap and pay credit cards, we're generally referring to peer-to-merchant transactions. I think where UPI is really going to create a big dent, where it's going to get widespread adoption, is in the peer-to-peer transaction segment. And I think that's a place where it does not have a significant amount of transaction. The speed at which the transfers happen, the convenience with which money can be transferred, I think that is unparalleled.
What is the basic parameter of determining the success of UPI in developed as well as developing nations?
Three metrics we will have to determine, and it has to depend on the country to country in terms of how deep is their financial market and the depth of financial access as well. If you look at, let's say, Europe or the US, most of the population has access to a debit card or a credit card. They're well banked. So the metrics here will have to determine how much of digital disruption can something like a UPI bring to them, and how much of time, money can they save over a large period of time, and convenience of real-time transactions. That's one. Whereas if you go to a developing nation, the metric is completely different, right? The value is less important than the volume of transactions. And can it also serve small ticket size transactions, which is very important for developing nations.
But experts do point out that the iron grip of major card companies like Visa and MasterCard on potential UPI markets like the US and even parts of Europe will be one of the major challenges for UPI's global expansion plans.
One is India moved from a cash-driven economy to a digitally transacting economy. Cash was highly inconvenient, so we moved from a very inconvenient system to a very convenient system. In Europe and US, where where credit card and debit card penetration is significant, it is already a convenient mode of transaction. So the resistance to change, I think, is going to be slightly more than what India persisted with.
The larger challenge is going to be is can they actually get into the cards network market, which are so well entrenched? Let's say the US, MasterCard and Visa are so well entrenched. Will they get geopolitical access at all in the first place? That's a big question. This lobby is so strong, and we would also remember how they lobbied hard against the launch of our own RuPay. NPCI, which hosts the UPI, does not have its own treasury. Unlike a card company which has its own treasury, what it means today is a UPI is dependent on bank-to-bank transaction, and that creates delays as well as adds a cost layer. So payment system like UPI, where customers are charged zero per transaction and instant payments happen, has not been favorable for the banks or any of the stakeholders. They don't make money at all.
Experts, therefore, are largely upbeat about UPI's potential in recreating its India success overseas. However, they also point out to the possible challenges it might face from card majors like Visa and MasterCard. And it's not just the UPI. India's Space Odyssey too has caught the world's fancy. And if all goes well with the Chandrayaan-3 mission, India will join a club of 3 other countries that have managed a soft landing on the moon. This mission will also give a fillip to the country's space startup sector. So, what does Chandrayaan-3 mean for private sector players? Ayush Mishra goes moonwalking for answers.
Chandrayaan-3 blasted off from Sriharikota in Andhra Pradesh on 14th of July. And it's not just ISRO and the government whose fingers are crossed and eyes fixed on its trajectory. Several private players are holding their breath too. The lunar landing is expected on August 23rd. Once successful, the mission will make India the 4th country to achieve a controlled landing on the moon, after Russia, the United States, and China. India's entry into the elite club will open several windows of opportunities for the country, and it will also fuel the growth of India's private sector players, whose role was crucial in this mission. Larsen & Toubro supplied several crucial components from the ground and flight umbilical plates to the manufacturing and proof pressure testing of critical booster segments. Their aerospace manufacturing facility fulfilled the stringent quality and timeline requirements. Some others, like Anant Technologies and Godrej Aerospace too, played roles in the mission. Sri Venkateshwara Aerospace built structural parts, while Naga Sai Precision Engineering Works supplied protective cases. Since the country opened the way for private launches in 2020, the number of space startups have more than doubled. Late last year, Skyroot Aerospace launched India's first privately built rocket. It was called Vikram S. The global commercial space market is worth $360 billion and is expected to grow to $500 billion by 2030, while India's market share is just about $7 billion. But private participation wedded to ISRO's capabilities could boost this share to $50 billion or roughly 10% by 2030. India's space economy was valued at over $9.6 billion in 2020. By 2025, this could go up to $13 billion according to EY India. The moon mission is likely to take it into the next orbit. Pawan Chandana, co-founder and CEO, Skyroot Aerospace, said, "Success of the mission will further add to India's goodwill in the Space League and will serve as a technology demonstrator for the future moon missions. This can attract more customers, joint ventures into India, and can help Indian companies and startups design and manufacture space systems and subsystems for the world." India currently has over 140 registered space tech startups like Skyroot, Satsure, Dhruva Space, and Bellatrix. These startups are focused on developing technologies with practical applications, including satellite-based communication, broadband, OTT services, 5G, solar farm operations, and more, contributing to the growth of India's space sector.
Chandrayaan series, Chandrayaan-1, Chandrayaan-2, Chandrayaan-3, which is spread over many years starting from 2008 to 2023, has given private sector a lot of opportunity to work on the series of moon missions along with the Indian Space Research Organization. Right from the day that the ecosystem was developed by ISRO, they have been working as vendors. And now they are almost at the level of partners because they are also involved in giving inputs on the design of the assemblies and sub-assemblies, and the capacity that has increased from 2008 to 2023 in India for the components, the assemblies and sub-assemblies which go into the spacecraft have increased many folds.
Within the space ecosystem, there are specific subsectors where private players have the opportunity to expand and capitalize. Satellite manufacturing, launch services, space applications, and space tourism are some of the areas where private companies can thrive. Space industry requires high-tech skills in science and engineering. This industry is known as a strategic asset for the country. So what will be the major challenges for the private sector?
It is also important to understand that most of these companies are in the SME sector. And the SME sector faces a lot of challenges in terms of funding, in terms of sustainability, and also in terms of the cash flow which needs to be maintained by constant orders, especially in the field of electronics, where they do not have many other options apart from working with ISRO.
Next challenge, both to private sector and the private sector and in general the space industry in India, is to scale up this capability, right? So right now, most of the companies have launched their first mission or first set of missions. It's all about expanding to hundreds of thousands of missions that as an industry we can launch and operate and sustain. I think that is the challenge that the private sector is taking on right now. And I think we are seeing all companies aggressively working towards launching more satellites, building more payloads, having the capability to download more data, and also having a complete pipeline to process this data to deliver analytics to customers.
India's private space sector looks all set to take off. Last year, funding for Indian space startups increased to $108 million, a jump of over 60% from the previous year. And the Chandrayaan-3 mission will only help it put on a fast lane.
Like the space startups, investors too are reaching for the sky. But amid the ongoing euphoria, there is fear lurking too. Nippon India and Tata Mutual Fund houses have stopped taking lump sum investment in their small cap schemes from July onwards. So, why are some mutual funds finding the going tough as regards the small caps? Is it just the sharp rally in the segment, or are valuations too a concern? Will more mutual funds follow suit? And what should investors do? Nikita Vashisht brings you all the answers in her next report.
Amid a steep rally in the markets, two mutual fund houses, Nippon India MF and Tata MF, have stopped taking fresh lump sum investments in their small cap schemes. This, however, has not deterred investors from betting on small cap stocks. The BSE Small Cap Index hit a new lifetime high of 34,079 levels on Monday, July 17, having surged 18% thus far this calendar year. Back in 2017-18 too, L&T Emerging Businesses Fund, Reliance Mutual Fund and DSP-MF had stopped taking lump sum subscriptions in small cap funds due to low liquidity and high valuations.
Even if we look at the Nifty Small Cap 250 Index, it was trading at a PE multiple of about 17 in March 2023, just 3 months back, which is now currently trading at 21. This amounts to 23.5% rise in the valuation multiple in just last 3 months. We've also seen that small cap as an MF category has received one of the highest inflows across all categories, and it could hurt returns in the medium and short term to deploy such huge sums at current valuations.
The inflows into small cap mutual fund schemes hit a record high of 5,472 crore rupees in June as per AMFI data. By comparison, the large cap schemes saw net outflow of 2,050 crore rupees, while mid cap schemes saw net inflow of 1,749 crore rupees. Between May 2020 and June 2023, the AUM of small cap funds surged from 38,820 crore rupees to 1.68 trillion rupees. According to Nityanand Prabhu of LIC Mutual Fund, investing in assets that have already experienced significant price appreciation is making it challenging to identify attractive investment opportunities. So, how should investors approach the segment?
So for such investors who have an aggressive risk profile and are willing to go through steep volatile cycles and have the ability to hold on for really long, now could be a great time to continue their ongoing SIPs. However, may not be the best time to invest in lump sum formats. Gradually build positions and exposure into the small cap and micro cap category so as to benefit from the rupee cost averaging concept, as well as ensuring that there is a gradual build up and allocation towards the category.
Overall, considering the small cap's long-term return potential, investing via SIP route may be a better option at the current juncture rather than lump sum investment.
Bulls, meanwhile, continued to maintain their hold on Dalal Street. On Monday, key indices touched yet another high. But amid the ongoing party, stocks of online gaming firms cut a sad figure. After the 28% GST, talks of TCS have put the companies in a spot. But what is TCS and how is it different from TDS? Raghav Agarwal decodes it for you.
TDS is the tax that is deducted from a payment made by one party, which is an income from the other party. Usually, when a company pays an individual for their services, they have to deduct the TDS. However, it also applies when a person buys real estate from another party. In this case, the payment by the buyer becomes income for the seller, and thus the buyer has to pay TDS on their behalf. This TDS must be paid if the property value is more than 50 lakh rupees. However, for non-resident Indians, there is no such limit. They have to pay TDS irrespective of the value of the property. The government decides TDS rates and thresholds for different goods and services for a particular year. TDS applies to payments such as salaries, rent, professional fees, brokerage, commissions, etc. The amount deducted by way of TDS is adjusted in the total income tax payable. If a person has made the extra payment, the balance is transferred to their account as an income tax return. TCS is the tax that is collected by sellers while selling something to buyers. The liability of collecting this tax falls on the sellers. TCS deduction applies to sales of goods like timber, scrap, mineral wood, and so on. TCS applies to sales of specific goods which don't include production or manufacturing material. The basic difference between the two taxes is that TDS is levied on the purchase of goods and services, while TCS is levied on the sale of these goods and services. In TDS, the person or the company making the payment is accountable. On the other hand, in TCS, the individual or business that is selling the goods is responsible. Moreover, TDS is deducted when the payment is due or made, whichever is earlier, while TCS is deducted at the time of sale of good or service. The last day to deposit TDS to the government is the 7th of every month. However, TCS is deposited within 10 days from the end of the month of the supply of goods or services.
I will achieve, I will fly high.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In May this year, Chief Economic Advisor V. Anantha Nageshwaran said the government was working on a mechanism to link the TDS and TCS. Well, that's all for today. But there is much more in store for you this evening. Please don't forget to watch Business Standard EV Dialogues, which goes live on our website at 4:30 p.m. Union Minister for Road Transport and Highways Nitin Gadkari will be answering all your queries on electric vehicles. And there will also be 2 engaging panel discussions with leading industry experts. So don't forget to tune in. And for more news and analysis, please log in to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.